Episode 25, Understanding Closing Costs, what buyers and sellers need to know before settlement. Montgomery County Market Intelligence with Francis Marquez. Welcome back to Montgomery County Market Intelligence. I'm Francis Marquez, your local realtor with REMAX. Today, we are talking about one of the most misunderstood parts of real estate transaction, closing costs. Buyers often focus on the down payment, and sellers often focus on the sale price, but the final amount you bring to closing or you receive after closing depends on much more than those two numbers. They are lender fees, title charges, taxes, recordation fee, commissions, prepaid expenses, and sometimes unexpected adjustments. Today, I'm breaking down the most common closing costs for both buyers and sellers so you can prepare before settlement day arrives. What are closing costs? Closing costs are the expenses associated with completing a real estate transaction. They are separate from the purchase price of the home. For buyers, closing costs are generally added to the amount of money needed at settlement. For sellers, closing costs are generally deducted from the proceeds of the sale. The exact amount will vary depending on the purchase price, the type of financing, the property location, the contract terms, the title company, taxes and local fees, negotiated sellers, or buyer contributions. That's why buyers and sellers should never rely on a general estimate alone. Your lender and the title company will provide more details, figures as the transaction moves forward. Buyers' closing costs. So let's begin with the buyers. Many buyers prepare for their down payment, but understanding that additional amount they may need for closing costs. Common buyers' expenses can include loan origination or lender fees, appraisal fees, credit report fees, title-related charges, homeowner insurance, prepaid interest, property tax adjustment, recording fee, escrow deposit, inspection expenses. Some of the costs are paid before closing. Others appear on the final settlement statement. For example, a buyer may pay for the home inspection and appraisal early in the process. Then, at settlement, the buyer may also need funds for lender charges, title fees, prepaid taxes, insurance, and recording expenses. And the most important lesson is this: the down payment is not the total amount needed to purchase a home. A strong buyer understands the full financial picture before submitting an offer. Seller's closing costs. Now, let's look at the seller side. Sellers usually have expenses deducted directly from the proceeds of the sale. And common sellers' closing costs may include real estate brokerage compensation, transfer and recordation, related taxes depending on the contract, title or settlement charges, mortgage payoff, property tax adjustment, homeowner association or condominium fees, repair credits, seller concessions, outstanding liens, or balances. One of the largest deductions is often the payoff of the seller's existing mortgage. That payoff may include more than the principal balance shown on the most recent mortgage statement. There may also be daily interest, administrative fees, or other payoff adjustments. This is why the seller's estimate net proceeds should be calculated before listing and updated again once an offer is accepted. The sale price is not the same as the seller's profit. What matters is the net amount after all expenses are deducted. Title fees explained. Title fees are another part of the closing that can feel confusing. The title company plays an important role in the transaction. It reviews the ownership history of the property and helps confirm that the seller has the legal right to transfer ownership. Title-related expenses may include title search, settlement or closing services, document preparation, title insurance, liens, and judgment searches, wire or administrative fees. Title insurance protects against certain ownership-related problems that may not have been discovered during the original title search. There are generally different protections for the lender and the homeowner. Your title company can explain the coverage, cost, and options available in your specific transaction. The title company also prepares many of the final settlement documents and coordinates the transfer of funds. Taxes and recordation fees. Taxes and government-related fees can also affect the final amount due at closing. Depending on the transaction, these may include transfer taxes, recordation taxes, property taxes, adjustments, recording charges for deed, recording charges for the mortgage, local or county fees in Maryland. The way certain taxes and fees are divided can depend on the jurisdiction and the terms negotiated in the contract. That means buyers and sellers should review the contract carefully. Property taxes may also be prorated. For example, if the seller has already paid property taxes covering a period after settlement, the buyer may reimburse the seller for the buyer's portion. If the taxes are still owed, the adjustment may work in the opposite direction. These calculations are typically handled by the title company and shown on the settlement statement. Common closing cost surprises. Now, let's talk about the cost that sometimes surprises buyers and sellers. For buyers, common surprises may include prepaid homeowner insurance, escrow reserves, daily prepaid interest, higher than expected lender fees, property tax adjustment, homeowners association charges. And for sellers, surprises may include a mortgage payoff higher than expected, outstanding liens, unpaid water or utility balances, condominium or HOA resale package fees, repair credit, sellers concessions, additional property tax adjustments, Another potential surprise is wire fraud. Buyers and sellers should always verify wire instructions directly with the title company using a trusted phone number. Never rely only on email requesting that may be sent to a new or different account. Settlements involves a large financial transfer, so verification is essential. How to prepare before closing? The best way to avoid surprises is to prepare early. Buyers should ask the lender for detailed estimate, keep additional savings available, avoid opening new credit card, confirm the amount needed before wiring the funds. Sellers should request an estimated net sheet, review the mortgage payoff, identify possible liens or balances, understand negotiated credits and concessions, and both parties should carefully review the final settlement documents before signing. Ask questions, confirm the numbers. Do not wait until you are sitting on the table at closing. Closing costs may feel complicated, but they become easier to manage when you understand them early. For buyers, the goal is to know the full amount needed, not just the down payment. For sellers, the goal is to understand the net proceeds, not just the sale price. Preparation creates clarity, and clarity creates confidence. And confidence helps make the closing process smoother for everyone involved. This has been the Montgomery County Market Intelligence with Francis Marquez. Thank you for your time and thank you for listening. And I'll see you on the next episode. Stay informed, stay prepared, and make every move with confidence. Disclaimer: closing costs, taxes, fees, and contract responsibilities vary by property, financing, jurisdiction, and transaction. Buyers and sellers should review their specific estimate with their lender, title company, real estate professional, and appropriate legal or tax advisors.